Welcome again to the Rick Helps Real Estate Show, where once a week we check in with my friends at Zoodealio. How are you folks?
What's up, Rick?
Hello.
Hey.
It's fun to check in and just get a pulse for what's going on in the real estate market. And remind everybody that if you punch the like button today, Kayla will not have to water the plants behind her.
Smash it. Smash that like button.
Please. She doesn't want to
Save her minutes and minutes of work today on this fine Monday. But we're coming up on what I coined prediction season. Zillow, CoreLogic, Realtor.com. I think Realtor.com misses it more than anybody. The president, the chief financial officer,
Yes.
Lawrence Wu, I think like that. I want that job. I just want to be the predictor. It's kind of like the weatherman. And we got a low pressure system coming in here, and it doesn't come in. You still keep your job. So
you're good.
Well, they predict enough, they'll get it right one of these days, right?
That's right. Yeah. Yeah. So I
1 out of 20.
I don't predict out long term, but I'm gonna say that through the rest of this year and going into January, February, I think it's going to disappoint a lot of people. What do you think?
Sadly.
Are you talking about interest rates, sales?
No, overall sales activity. Let's talk from a seller's perspective.
Mm-hmm.
I'm waiting till January 1st of the year. It's going to be better. I don't think so.
Agreed. Right. We're seeing things somewhat flatlined. That Lawrence Yen you just mentioned, NAR's chief economist, he did post some interesting data about how government shutdowns of sizable magnitude, kind of like the one we're experiencing in the past, have caused even slower home sales, and gave some data on that. And I thought that was really interesting. And does that play into what we're likely going to see this November, this December, heading into next year? And we could see that relatively flat. But he also did share that in previous shutdown years, that the months after, when interest rates eased a little, sales activity spiked. Yeah. So does that mean maybe we'll have a slower Q1 and beginning of Q2 we'll start to accelerate?
That could happen. What I'm seeing is, I track the numbers every morning. I pull them right off the MLS. So I take new listings plus back on market, and then I subtract canceleds and expireds. And then I add in under contract, accepting backups, contingencies, and pending. And that number is not rising above 2,750, and it hasn't forever.
Wow.
So I look at it and go, okay, what's going to make that go higher? Now, the difference between the number of contracts that are out there and the number of new listings, you have the gap. So if there's a gap, then there's no upward pricing pressure and there's some downward pricing pressure. And so I'm seeing that the gap is marginal, maybe about 300 homes. But I'm not seeing a catalyst that says, okay, we're going to go from 2,700 to 3,500. I don't, even with
something would have to change.
Yeah, big rate cut.
There's something that's going to change though in May of 2026, right? And that is there's going to be a new Fed governor.
Okay.
Do you think maybe and that's an appointed Fed governor, right?
Yep.
By the administration.
Yep.
And the administration, what they want. They want rates to be
stimulate
slammed to the ground. And so they're going to appoint a Fed governor that is going to slam the rates to the ground. So will we see the market front run that? I mean, I think we'll see the stock market front run that, but will the housing market front run that? Will the institutional buyers front run that?
Well, I think that's another reason why Q1 is going to be real slow, because there's just another reason to wait.
Yep.
Yeah.
Yep.
Yeah.
Wait and see.
Yeah, it's like the hurry up and wait game.
But there's also refinance options for people if if you're gonna get into the market when it's slow right before the market or the rates are slammed down. That's probably a good strategy for a lot of people. Still get a great deal in the first quarter and maybe refinance in the third quarter when rates are
Whoa.
low.
Wait. Are you saying to marry the house and date the rate?
I think a few years ago that was a bad thing to do, but
Now
with
I
the
think
new
it's a good thing.
Fed
Absolutely.
governor coming in, I don't know. I think it might be something to do.
I'm with Jay
This
on
year.
that one. I
You know?
think it is the smart move. You're going to capitalize on the opportunity for getting yourself a good deal because, as we've been talking about, yes, there's not a ton of inventory, but there's not a ton of buyers either. So it puts you in an optimum negotiation position.
Yeah, when we just heard Fed Powell say in December they're going to stop the runoff.
Yeah.
And when they stop the runoff, that
Stop
means
burning money.
It's stopping now.
Literally.
Now they're going to start printing more. We're going to start to see quantitative easing, and that's going to put more liquidity into the market. And then we get a new Fed governor in May, slam the rates down. We're going to see house prices go up, maybe.
Well, we're at 4.2 months of supply. And so we have to look and say, okay, is there something coming down the road that's going to lower that? You know, I mean, for prices to start flying up, we got to be about 2.5 months supply, or God help us, half a month's supply that we saw in 2021.
Oh,
So,
yeah.
Insane.
you know, hopefully that won't happen. I'm going to share this chart that I have here that is my very simple little Excel spreadsheet. And what I show here is, see that big yellow area or gold
Yes.
area? That's
Yeah.
new listings.
Ooh.
That black line is new contracts.
Hmm.
So you can see how it slammed down this week. That's because expireds hit at the first of every month. So we have 1,074 expired. So it pulls that number down. But the black line is the one that just hasn't moved. And these are holidays, these big dippity doos here. So that's what I'm watching. I'm saying, okay, I get the yellow area. We're going to get more new listings and everything in January. And I think in January that we're going to see more new listings come on. If we see contracts start to increase, then you're going to get that conversation where the seller goes, well, I heard, my neighbor told me, my realtor told me, now's probably a good time to put my house back on the market. So as sales increase, I think new listings will increase at about the same momentum.
I know we're not like predicting anything, but I kind of did like that prediction, Rick.
Yeah, no predictions.
Out of the three of you, one of you is writing that down, right? So
Yeah.
Well, I still, you know, one thing I kind of keep in my head, and I forget, I keep in my head, but there's an economist, I forget the guy who said it, of the things I should be keeping in my head, is where they basically talks about, you know, just the overall affordability factor when you're talking about median household income, other, you know, debts, et cetera, that anytime that the rate goes above 6%, especially with prices the way that they are, a lot of times it becomes more unaffordable. And so we start getting close to that 6% and underneath, it's going to drive more affordability. And that to me is that's been the barometer for a while of where I think we need to get to underneath that. Right.
Yeah. We also did just see what Berkshire Hathaway and Zillow both came out last week and said, essentially, you know, interest rates aren't going to solve the affordability equation. We're not going to get there with just
not solely.
Cuts. Right. And so like what else has to happen? You know, I just look at the macro and you see all these layoffs and you just
jobs.
see AI cannibalizing jobs and
Yep.
a lot of consolidation. And it does kind of make you wonder what can be done. And we were having a conversation with our son. He's 20 and he was telling us about his friend who just rented one of those build to rents. It's like they call them the cubes in Queen Creek. And so these little, you know, little 1 bedroom, 1 bath
Cubes.
It's like a cube. It really does look like a cube. But, you know, we were having a conversation with Kyan and saying it's too bad that builders aren't building that product for sale, because that could solve a lot of problems. And, you know, maybe it just doesn't pencil out. Obviously, there's not enough money in it. But we really ought to be looking at solutions for affordable housing so that we can have that entry level product. Because if you could get something for under 200,000 that didn't have a $300 HOA payment, because you're in some sort of condo complex, that could really change the equation on affordable housing and get the market moving.
Absolutely.
And so it's like, it's frustrating to see these build for rents popping up for institutional, purposes, and not for the average everyday American.
Well, because there's more money in it. There's
I
more
know,
money
I know.
in renting them out than to sell them. Unfortunately, I mean, they can get, the $1,500, $1,600 a month off of the $200,000 bill.
Totally. To your
I'm
guys' point,
leery of anything of a huge rate cut that reignites housing. I kind of like how we're just steadily moving along. Prices are starting to decrease. It'd be okay to hang here for a while, in my opinion.
Well, it's going to hang until May, and then the administration's going to want to win the next primaries, and they're going to push hard to make this economy look like it's on
thriving
fire
by putting more.
And the only way to
monopoly
do
money.
that is to slam interest rates down to the ground. And I mean, I don't see any other way.
And print.
They're going to print. They're going to the printing machine's going to go on, and
You can hear
we'll
it warming up now.
Yeah,
Hear the whirring.
it's whirring.
Yep.
Yes.
They're greasing the gears for sure. For sure.
It's
One of the
no,
things I want to
go ahead.
I just wanted to add real quick in this that actually personally frustrates me is because when you look at like the economic sectors, real estate is one of the most downhill rolling things that touches all sectors. And when we look at this, right, like stimulating that particular piece and doing it in an intelligent fashion, I think has got to happen, and we have to figure it out. So we're talking about jobs. We're talking about, just overall movement of money. And one of the best ways to do that is real estate, right? Like, I mean, it's like what, 30%, 35%, depending on the times of what when you're looking at, the economic sectors. And so when you realize that it's that powerful, it is paramount that we figure these things out. And not to mention, you go back to the Great Recession of 2008, et cetera. That was one of the biggest issues we all dealt with, was obviously that housing crisis. Once they figured out how to solve that a little bit, money got moving, and it slowly but surely solved itself.
Do you think we'll look back at Q4 of this year and say, wow, there were some real negotiating bargains to be had back then. I wish I'd have taken advantage of it.
I do. I do. Absolutely. We see them. We see them happening on the daily here. And, it's like the people that are hesitant, does that hesitancy end up hurting them in the long run? And I think it could.
I'm seeing still, though, I mean, a huge divide between buyers and sellers. Buyers, I don't care what price you set your house at, they're not going to offer you that. And you could be the bargain of the neighborhood. Let's say it's a house that's worth $700,000, and I say worth because comps are hard to figure now and everything. But let's just say that in today's market, you could look at that and go, it's worth 800. It's everything around it sold for 850, 900. So we're going to make this a really attractive price at 700. They won't get an offer for 700.
It'll be 675, 650.
650, yeah.
Buyers just have it in their head, I'm not giving them what they're asking for, even if it's, on sale. And so, buyers will not, some buyers are very savvy. They'll reach out and go, well, I looked at when they bought it. I looked at what they paid for it, and I look at what they're selling at now, but they don't know how much improvement the people put into the house. And they go, well, and I looked around the neighborhood and I saw this, saw that. I don't think it's worth what they're asking, which makes us go, well, let me dig up some numbers and let's see what we're looking at here.
Yep.
But so the mentality is there's two things at play here. The buyers are saying, I don't care what they're asking. I'm not going to give it to them. And I want everything fixed.
Oh, yes.
Everything.
We see that.
And the sellers
Definitely
are going, I'm
piece.
willing to contribute. I'm willing to contribute to closing costs. I'm willing to come down somewhat on price, but not the first week. We see listings come on. They've been listed for 2 days and they go, I want to come in 70,000 lower. They're not going to listen.
What?
Right. Well, and then there's that saying that usually your first offer is your best offer.
Yeah.
And then does the seller end up just sitting on market, taking price reductions, and then ultimately accepting an offer around that?
Oh yeah. Listing gets
Eventually,
tainted.
I mean, we see that happening too. We manage a lot of resales for the investor buyers in the Zoodealio ecosystem, and we'll see that, that listing will go on. It's fresh. Maybe it's even had repairs and renovations, and then offers will come in and they'll be low, and it's frustrating. And you're going, this is a great property, and work's been done to it. It's move-in ready, and they still want this steep discount. And then house will just sit on the market when they don't accept that offer. And then ultimately, maybe they end up accepting an even lower one. I mean, sadly, we've seen that play out, and it's not fun.
Yeah, I've coined it the year of the buyer revenge.
Yes.
Buyers strike back.
It's been a couple years of buyer revenge.
The movie.
Buyers. Yes.
But I think 2026 is going to be the year.
The turning
The
point.
seller strikes back.
The seller strikes back.
Seller strikes back.
I'm curious,
enough.
Rick, what do you think the interest rates would have to be or would get down to start to see that flip to where the inventory starts to come down and the prices start to go up?
5.5.
5.5?
Yeah.
Yep.
Because we've
And-
seen it before.
Yep.
Well, and one of the things that we've been watching closely over the past few years is the spread, the spread between the Treasury and the mortgage interest rates. And we know that recently it's compressing, which I think is good news. Does that mean that the sentiment around housing and mortgages is more favorable now? But because it has compressed a little, so I think that to get to that 5.5 wouldn't take much.
Mm-hmm.
But I definitely think last week the market thought that, that statement from Powell, I can't remember what he said, something about, hey, we're probably not going to cut again, essentially was the essence. And that just
Threw
Markets went-
everything for a loop. It was
Yeah,
Yeah, he pretty much said there's chaos going on behind closed doors, right? That
Yeah.
There's just that they're far from an agreement of what's going on and how to solve this. So yeah, to me it's super interesting, and it's, I don't want to say it's easy to solve, but at the end of the day, if money doesn't move, we have problems.
Well, I
if we
saw-
lose liquidity, yeah. I
Well,
agree with you.
and then the debt too.
Yeah, and the debt.
The American debt. I mean, it's
37 trillion.
It's 38 now.
Oh.
It just went over. It went over 38
We broke the 37.
like a couple weeks ago. So we're adding another 3 trillion every year. And if we don't refinance that, it's gonna go faster and faster. And so that's why I think this new Fed governor is gonna slam those rates down so they can refinance the debt, devalue the dollar,
Yep.
and inflation's gonna go back up. We're gonna see house prices go up. We'll see interest rates coming down, buyers flood in. And I think we're gonna see another one. It's gonna be a big one too. That's what I believe.
That's
it's
just
gonna
the
be
importance of buying
interesting
assets.
to watch. Let me ask you this as a final question. A lot of people pull their homes off over the holiday. What do you think about that?
Since no one's kind of like chiming in, I have a few thoughts on that. Obviously it comes down to motivation of the seller and what is their motivation. I do believe, though, just working with buyers, that if the buyer is out looking during the holidays, they're more motivated. And so if you're
Exactly.
pulling your home off the market during the holidays, you could potentially be missing out on very motivated buyers, because let's be real, if you're out there looking for a home in November and in December, you're probably pretty darn serious.
Yes.
And then another thing I love about the holidays and having the home on the market for the holidays is if you have a nice Christmas tree up and you've got some warm decor, it can be really inviting for buyers. And we all know that buyers are emotional. And so if you get them in that right state of mind and they're out home shopping and yours looks amazing, it could be a great advantage for you. So I don't think it's the best idea, but Some sellers don't
it's-
want to deal with it.
I also think in some markets it's a really good idea. I think the Phoenix market is a great time to have your house on the the market during the holidays, because what happens? We get people that fly in to meet with family and come into this beautiful weather in the Phoenix area in December, January, and it's great weather, and they're coming from freezing cold tundras and
We
snowy
catfish
crazy
them with our weather.
and then they're like, wait, this is amazing. And they might.
Well,
purchase a
I agree
house.
100%
Second home.
because I think during the holidays you have less buyer traffic, but they're more serious. You'll have
Yes,
fewer showings,
exactly.
which is what you want during the holiday season anyway. You can control the appointment, so they're not going to walk in Christmas Eve. But you'll have fewer boots on the ground looking for homes. But the ones that they're out there because they want to move in January. And so you get, I had a house in Fountain Hills. I listed it on Christmas Eve and had an offer New Year's Eve. And it
That's awesome.
and they were serious. They were from Northern Cal, and they came down and we got a good offer and got it sold. And so they weren't beating your door down, but the ones that show up, they're serious. So I think, look, if you're already listed, don't pull it, because what happens is everybody says, I'm going to pull it, but I'm going to put it back on in January. Well, you think you're the only one that's going to put it back on in January? Now you got all this competition.
Yep.
So I say leave it on and see what it doesn't hurt you. So, well, we'll see who's right. Probably all of us or none of us. So, but always look forward to talking to you guys and getting your insight. And we will be back here next week with more stuff. How's that?
Yes,
Love
Rick.
it.
Thanks, Rick. Appreciate it. Have
All
a good
right,
week.
Take care, guys.
Bye, Rick.